This is Justin Pulitzer. This is my weekend video for the week ending September 21st, 2014. And I'm going to jump right in and start with the S&P 500 to start with a macro overview. If you take a look at what happened here this week, we had been grinding down slowly off of this high. And it was just sort of like this forcing, begrudging move down. And you can see here we started putting in a lot of bottoming tails, and then we had this big reversal bar here on some Chinese easing. They had injected some liquidity into their banks, and this was pre-Fed. This here was the Fed day. It kind of went both ways. You went lower, higher, and then just kind of closed up at the highs of this bar, which I would think in the bigger picture was still fairly bullish. Next day we came up, made a new high, and then on Friday we had a little bit of weakness in selling after I guess some people were just taking some profits and probably a little worried about weekend risk and the usual fears. So my thinking here is that the Fed day is the key day, this bar. Anything up over this 201.68 is bullish. Anything below this 99.75 I'm thinking is a little bit more caution, which would probably take us back into this secondary trend line, and also the old reference high here, which would be 99.06. If that starts giving this area, this is really the key area, this 199.06 to 198.29, because as you can see, these were the highs before this last correction. If we start losing this bar here, the tone, I think, of the market would really start to change. If we lost that, that 198.5, my thinking is we would easily, probably by that time, the 50-day will come back up. So it would be a losing of the 50-day and this bar. And my thinking then is we would come back in to start testing some of these fibs, this 196.23 area, and also here where the rising 100-day would probably coincide with the primary trend and also the 61.8 Fibonacci, which is 194.89. That to me would be a good buy point for a play, possibly back up to these lows here, which would become resistance. But let's not anticipate too much. I like to give the bear case, and I also like to give the bull case, which is if we do happen to come up and retake this high, I think the key, like I said, is the Fed day, the 199.75. We probably would make it up to the 204.32, which is the 161.8 Fibonacci. Extension. So that to me, let's just set some alerts and go with the high or the low of that Fed day. If we take a look at some of the other indices, maybe that could give us a little bit more guidance. The Nasdaq still holding up pretty strong. That did have a little bit. It got close. It didn't quite test the trend, but also reversed, came up and made a new high, and also stopped on the 20. So that's not really giving us too much more clarity on that. But my thinking again is if we happen to lose this day, this bar, and my recording is frozen. Wonderful. Oh no, here we go. If we happen to lose that 98.05, my thinking again is that the tone of the market would change. This is also a rising 50 and this trend support. So if that happened to get lost, then I would start thinking, we're probably going to come back in and have a little bit more of a correction. I had outlined in another video that there would be a potential head and shoulders setup if we did happen to come down to this 93.89. Again, way too early to call that. I'm just giving the bear case scenario. Everyone's always looking for what the downside risk could be, and that would be it. So again, let's use this Fed reversal day here as sort of our guide, as our first line in the sand, and then this big body candle. IWM, on the other hand, has been just sort of all over the place, a bit of a choppy mess. Really nothing to see here. My thinking with IWM is that you kind of have to wait for a break of the downtrend line, or a break of this uptrend line. These higher lows and these lower highs are really not giving much in the way of direction here. So my thinking is that we're going to play a fill up the triangle game. If we break above, it's probably going to see 120. If we break below, we're probably going to see these 107s. So that to me is the play. You just wait for the break and then go with it. The Dow, on the other hand, the diamonds have been relative strength. As you can see, we really powered up through these old highs with real conviction, and we came up. Friday was a little bit of a reversal bar, And my thinking there is that it's probably still fairly bullish as long as we hold up above these highs, this 171.32 to 171.35-ish. If we start breaking there and coming back down into range, obviously, the picture will start to change a little bit, and we'll have to reanalyze that. If you take a look though at the cash index, it did put in a little bit of a topping tail here, which is a little bit concerning. Obviously, that is a little bit of excess as far as prices go. It's not like crazy excess, but it's definitely something to keep in mind. Again, the context is what's important. We had kind of made almost here like an inverse head and shoulders, and it seems to be breaking to the upside. So it wouldn't be all of that abnormal for that breakout to be retouched and that still be a bullish pattern. What we'll be looking for to see is if this does happen to come back in the next couple of days, if this 1751.56-ish area holds, and if that happens, do we see the V reversal back up, or does it give and then we tumble back down for pattern failure? So let's keep an eye on that this week for the Dow. That's pretty important. If you look at other tells, the metals have been a complete disaster. Gold here has been coming down. I had been talking about this coming back down to the 114s. We're almost there. Although I'll tell you, if you take a look at a bigger picture, if you look at let's say a 3-year chart, let's do a weekly because it's just so long. We came down here once, we came up here, we came down here again, lower high, came back in here, a bit of a higher low, but then a lower high, and now we've taken that out. So I'm starting to get a little bit hesitant thinking that this might be a bounce play. It probably does get some kind of a bounce, but I don't necessarily know if it's going to be so playable because there's also some fib support there just a little bit below at the 111s. But my concern there comes in with silver, because silver is usually the leading indicator for gold. And if you take a look at what happened with silver this week, it didn't hold. It had that test, and it actually broke down. You could see we came down here. The hard deck I had posted was 1775. I actually had tried playing this long and got stopped out around 1780. Luckily, I honored my stop, and wow, this thing came down. So these reference lows have been taken out in silver, and silver in my like I said, in my experience, has been sort of like the tell for gold. So really caution mode here in the metals. I mean, this silver seems like it's getting a little bit oversold. There could be possibly some kind of a bounce, but I would think that that's almost kind of shortable until you come down to maybe a fib extension, maybe like into the 1622 area, which is the 161.8 fib extension from that last move. So definitely caution in the metals. It's definitely looking kind of ugly. The other sort of risk off or safety play was TLT, and that, as you can see, I had discussed up here that this was coming in, into being really a short, and you had this island reversal and this really nasty gap down and follow through. And you could see this week here on Wednesday, you actually had a bit of a look below this range and also below trend, but it failed and it came back up pretty strong to fill this gap. So my thinking here with TLT is that it probably has a little bit more room. Maybe it comes up here and retests this reference peak, and also which would coincide with the 50 and maybe with the 20 if it comes down. My thinking is like there is probably a little bit more gas in that tank. I would be a little bit cautious. I'm not really like a super bond bull, but I for sure think that there is probably a setup coming in maybe here for a short. If it could get maybe back up into this 38.2 fib retracement, or maybe somewhere between there and the 50%, the 116, might set up for a nice short for a pullback. If it starts really getting above there, I really wouldn't step on the gas, short. I would probably even be looking possibly for a long if the market does get a little bit squirrely. So let's just keep that in mind. Like I said, my first initial instinct is to try it as a short somewhere in here with these, maybe a confluence of these moving averages for a pullback. But TLT, this is showing that there is still some buyers, I guess, out there, and that's going to definitely be on the radar this week. Let's take a look at let's get into the real meat of this discussion, the Momo names. So if you take a look at Apple, Apple had the iPhone launch this week, and we know it was the most successful iPhone launch ever. You have the big, finally into the phablet territory. They have the iPhone 6 with the 4.7-inch screen, and the big boy, the 6 Plus with that 5.5-inch screen. But as you can see, with all of this action, Apple still hasn't been able to take out the launch event highs or the all-time high, which is up here in the 103.74. And I had been discussing in the last couple of videos that if Apple can't get back up over this reversal bar, this 103.20, it's kind of a wait and see. I did say that there were some long opportunities, and we did play it long here, but it's still now kind of making some lower highs, and we did stop on the 20-day on Friday. It did have this bit of a precipitous sell-off into here, but my thinking is that Apple might be cooked for a little while. It may need to come back down and retest retest in this channel. You can see it's been in this channel for a while. Monday is going to be some sales numbers. My thinking is if you do get a bit of a pop, you might want to lighten up a little. My thinking again is I would like to see this actually, believe it or not, come down and set up for a buy for these earnings. Preferably, if it came down here maybe to this old reference low in the 99s, or maybe even a little bit lower to retest this channel somewhere in the 98s, back to these reference lows, and possibly the 50-day again as a setup. You might want to play it there again for a pop, but we'll see. I mean, I really want to see Apple take back this reversal before I think it can get into the next range. The next range, again, I would think would take it probably, you could probably ride up into this channel. It's not on this chart, but 109 would be a big fib extension for Apple. So that would be my end target if we can take out these old highs of the 103s. Until then, it might be chop, and we may have to come down. We'll have to see how this reacts next week on Monday. If there is a big pop on Monday, I'd probably use it to book some gains, though, and then wait for a setup on some kind of a pullback again. My other names that I really like, Facebook, a rock star, again, just kind of holding up after this reversal, again up at the highs. Anything over this 76, 74 is bullish in Facebook. And again, this sort of this trend line, you can see here we had this dump day. We kind of stopped ahead of the 50 and then came back up to close on it. Here we opened up below, but then powered back up through it. So you can see this little rising trend has been really pretty good. Anything above the 78.36 would be pretty bullish for Facebook. I think you'd probably get a move maybe to that 80.85. We'll have to see. If there's a pullback and there is some kind of a snap of this again, I would, again, there's always that danger if the market does pull back that we might come back a little bit further into range to test here and to maybe to test the 50 again, or possibly come back in and even test these moving averages. I'm not really seeing that in this chart. Like I said, this is looking fairly bullish to me. We did have this breakdown, this big engulfing bar, and then the next day it just got taken right back. So there's still some buyers in Facebook. I would think also with end of quarter, this is probably a name that funds want to own and show that they've participated in. It's been a pretty good performer. The same thing for Twitter. I've been discussing the levels in Twitter, that the 48 is really the important level. You could see we came back here, had a little bit of a violation of it, but then still held this trend and closed strong. And then, again, here, just took it right back. You had a little bit of some topping tail action here, but on Friday, even with the market kind of sagging off, closed at the dead highs. This is what's known as a flat top in a big engulfing pattern back up to the highs. So my thinking still is that Twitter might be, and also another one of those benefits from the window dressing. If it does lose this bar here, for example, though, I would get a little bit more cautious. My ranges I've been discussing is that 40, anything above 48 is bullish, anything above 50 is more bullish, and then anything over 52 is very bullish. And you could see we closed up here at 53. So this is still bullish to me. I still like the price action in Twitter as a buy the dip stock. One that's been was a little frustrating this week, but it wound up working out really well, was Google. I had discussed with you guys in the last pattern that I had seen Google here making some higher lows and then here making some higher highs with a break of this pattern. However, it got a little bit squirrely last week. We came back here. I had discussed that this level here was really the must hold for me. We came down here. We closed with a bottoming hail hammer and kind of closed right around at it. And then we took it back really fast with this. my thinking here is that this Alibaba IPO shows just how cheap Google is. I mean, I think Google's trading at something like 16 times earnings, which is really, really cheap for a premier name like Google. I mean, if you could get Baba selling it, something like 32 times earnings, and Google trading at 16 is absolutely ridiculous. So my thoughts are this week is that this is getting a little bit extended. It's been multiple days up. So there might be some selling if we do get to these reference highs. It's always, we're in a responsive market. So my thoughts are is we probably do maybe get up a little bit higher to test these 108s and maybe even to the 115s after a little bit of sideways chop. But as long as Google is kind of holding this trend and it keeps making higher highs, it's probably a buy the dip stock now. I'm long a little bit of Google via short puts, and I had mentioned here that if we got up over the 97s, that it was pretty bullish. And wow, Friday again also closed at the dead highs. So like I said, maybe we'll see some consolidation. That would actually be the healthiest thing for Google if we could come up here and then consolidate. But that's really that'll really be the tell. Is if we come up to the old highs and then dump immediately, then I would think it's more bearish. If we just kind of chop sideways, that would be the healthiest thing, and then look for a move higher. Maybe it gets a little bit of a bid for some window dressing also into the end of the quarter. It's been a relative underperformer, so maybe it plays a little bit of catch up. Price line I had discussed. And I had said that I thought this stock had looked a little bit bearish. During the week, I had said I thought it was going to catch a bounce, actually this day, and it wound up bouncing pretty nicely. I have been kind of looking for Priceline to set up again for a short. I've been really looking for it to come back and retest that 187, like 1100, 187 level, which was that prior low. And maybe we'll come back up here and test, I usually like to look for fib bounces. That somewhere between the 38.2 and maybe these this prior uptrend here that failed, there seems to be a confluence of moving averages. There's the 100 MA and also the 20 MA. So somewhere I would think in here, also with this, it coincides with this downtrend line. So I would think somewhere up in here, somewhere in like this 1225-ish maybe a little bit lower range would probably set up as a short. Somewhere between 1212 and 1225 I'd be looking on to start initiating a short in there. If we do happen to get back above here, I wouldn't fade it, and I would I'd cover up pretty quickly and probably look for a move up to some of the higher fibs. So this will be a test short. If it doesn't work, it's going to be a right or right out play. We'll know very quickly, in my opinion. It is a little bit oversold here on the stochastic, so technically there is some time for it to come back up. Usually with the Stokes, we like to wait till it actually starts breaking above the lower band for the trend reversal, but let's see how that plays out this week. We'll be looking to tee up a short and hopefully get that move back down here. If we do happen to get back down to this 1087, I don't necessarily think it's going to happen this week. It's very possible with this stock. It moves in big gobs, but that will definitely be a long for me to set up. I'll probably be selling some OTM puts here in some size for a right or right out type of a trade, even maybe with shares to play back up for a retest of even for the downtrend line. But I would think that would be a good spot to play that for a long. Tesla actually is a bit of an oddity. It was in this bull flag here, and it was holding trend, and then Morgan Stanley came out and kind of thumped it and reversed on their downgrade with a downgrade. They had just upgraded it. So for me, this firm is starting to lose a little bit of credibility. I don't know how you upgrade and then you downgrade really quickly. So anyway, this came back down, and it came back into these reference lows. We had the bounce, like I had said. I thought it would get up to 265. I had mentioned that on the stream. We did get a little bit above there, and I had mentioned to take some profits, and we came back down here. Now, the danger with this is, of course, the head and shoulders pattern. Lower a high, book with a higher high, and then a lower high. I think this needs to build out a little bit before there's really some risk of that. But and you also have the 50-day and the trend coming in here. This other, let me see if I can show it. This other trend off these lows has held like a champ. So I don't really see a short in Tesla unless you start seeing this crack and then maybe we come down to test the 240s, the 243 area, and possibly even the backside of this old descending trend line, which would coincide with the 100-day moving averages is around 231. So it'll probably come up a little bit, maybe to like 232 through 33, maybe 235. It just depends on how long this takes. And to me, that might be a buy point for a bounce at that point. But Tesla is a little bit more of a precarious chart because this bounce was so weak. It didn't even come up to see the 20. It did come up to retest those the old high though of the 265 and rejected. If Tesla does happen to regain its Momo and does get back up over this high here, I think you could probably play it long over the 265.60 up to maybe the 272 area. That was really the breakdown of this this flag wedge. And also, this was the high here it was actually kind of around the pre-market. This was the pre-market low. This 270, the 272.20, the day of the downgrade. And once it lost that was really when this escalated. So I would think that if we do come back up into there, that might be another resistance point, and we could easily see that if we do get back up over that 265.60. Let's discuss, I'm running a little low on time, so let's just jump into YHOO and BABA. YHOO, I had mentioned last week that I thought it was going to be a sell the rip stock, and I was saying that we might get up to close to this 44.32 fib extension, but anything near there was a sale, and we did get the 44s, and we did have a pretty hard reversal. You had some chop here, and then wham on the BABA day, you got the move back down here to the 20. I had said to start in real time. I had said to start covering up here near this around 40, a little bit sub 40, and we did get a decent bounce. Let me get rid of this fib. This was from when I was playing it intraday the other day. There we go. Much better chart. So my thinking here with YHOO is that it's probably still a sell the rips type of a stock. I do think that it will set up for a long at some point. I'm not like super duper bearish on YHOO, although I do think that the stock is going to be a little bit hard pressed to trade on its own now. I know they did retain BABA shares, and the higher BABA is, the better it is for YHOO. But YHOO, I can't really see it having much in the way of earnings prospects, so my thinking is that we'll probably come back down to test some of these fibs around this 38 is half back, and maybe even the 61.8, which comes in with the 50-day moving average here around in the 37s, possibly a little bit of an overshoot, to where this breakout started back into this region. But I would think that at that point, YHOO would probably set up for a buy, just for that, that BABA reason, and maybe just, for some type of a healthy bounce. So my thinking with YHOO, again, is still sell the rips as long as we're in this downtrend, and then be looking to reverse and go long somewhere, close to these 37s area. At least that's how I'm going to be playing it. BABA, everyone wants to know about Alibaba, right? My thinking on Alibaba is I think it's really... It's a stock that was super hyped. It was all over the news. I hate when I see something like that. It reminds me of the 99-2000 era, although this is trading with some actual earnings. Fundamentally speaking, I think Alibaba has something like 80% of the market share in China, so I can't really see how much they're going to expand that. I could only see them maybe with market share loss, but in the short term, that's not really going to make much of a difference. I know the bull case is that they're going to have a larger population of people moving to internet sales, and that'll supplement the market share, and it'll just be a bigger pot. Yeah, that's fine, I guess. Let's just talk some technicals here. BABA here intraday. The IPO came public at 92.70. It quickly ran up. It didn't even get 100. I guess you had some anticipatory sellers, and then quickly came down, broke syndicate, came back down here to 89.95. My guess is syndicate here stepped in. I actually had discussed this as a long versus low of day here, right when this was happening, and that really worked out well, where they moved back up to the IPO. It had some responsive sellers there. I guess anyone who chased it on the initial offering and weren't rewarded got whole. Came back down here, higher low. We like that. and then came back here and closed up pretty strongly over the IPO high. So I'd say BABA on the whole had a pretty successful IPO. I mean, their range was 66 to 68. The stock came public and closed above the offer at 92.70. So my thinking here is that if you hold this day, you probably can play a little bit long against this trend. I mean, it's just an intraday one, so it's not really going to hold too much on Monday. So as far as being relevant, so let's just say $90. You know, if BABA gets DAC down, you know, I guess hold it long against this low here of day 89.95 if that's what you're looking to play long. I personally think the stock is going to revisit at some point and see that 66.68. Will it get 100, 120 before then? Yeah, it's possible. But for me, this is a hard chase. I would probably look to buy it if there's any type of action like that with a sell-off. Twitter had that run up and then sold off pretty viciously. Facebook, we all know what happened. I'm not saying that's the exact case here, but for me, for something that I'd be comfortable really holding for more of a swing trade, it would have to be back down there. On the intraday, let's trade it long against this 89.95 if it does have some type of a pullback, or if you're really super short term, just use that syndicate price, that 92.70. That to me is the was the IPO. That's going to be the one that everyone really kind of has reference with. I was hoping to get a little bit more done, but we're already 26 minutes in. So just ask me if you have any questions on the stream. My Twitter account is @JustinPulitzer. You can follow me there. I respond to questions very quickly. Please be sure to like this video on here and leave some comments if you have any, if you want any feedback. To give me some feedback. I always love it. I welcome it. And thank you. And let's have a good week trading.